Is the market's future trajectory in the coming weeks predicated solely on these talks about new stimulus?
Good morning, Dom. I think the market gets it. I think that this current stimulus bill was negotiated for a very long time. I think it's clear that there's a lot of the rhetoric is maybe well intentioned, getting larger checks, but I think we're done. I think the market is looking forward to, the vaccine story and the reopening of the economy. I think, all of this uncertainty. People love to say the market hates uncertainty. I don't know if that's so true, having experienced this year with you and everyone else. I think the market cares about interest rates and these big long-term stories around technology and automation and electric vehicles and you name it. So I think the market's going to take this in stride.
So, I mean, we know it's taking it in stride. We're just a hair away from record highs for most of the indices. Yeah. The Russell 2000 and NASDAQ are at record highs again. Is there anything that gives you pause about the rally that we've seen? And is there anything that makes you say maybe this is overextended and due for a pause?
I think that, the market reacts to itself. So I think that, it's always overshooting and undershooting. So there's always that. And we call it volatility, but I always laugh a little bit because, volatility, we haven't really seen the volatility I think really people would have expected, certainly not on the implied side. I would say what stalls this market or what makes people think twice is what's inevitable, which is that kind of quarterly discussion about inflation. And so we're not seeing inflation, probably won't for a while, but it doesn't mean that people can't talk about it. And I feel like every time there's an incidence of inflation, it gets extrapolated out to the broader economy. I think anything that gives people a reason to talk for more than a day or two about inflation absolutely could stall what looks to be another great year for equities.
All right. So one of the things that there's concern about right now is the American consumer. We just heard about the prospect of stimulus checks that were of the $600 variety. They're looking to up it to maybe $2,000. We know that those stimulus checks were a key part of the retail picture earlier this year. Is it safe to say that when you look at the companies that you want to buy in the coming weeks and months, that the consumer focus does still remain?
Oh, it absolutely does. And I think the extension of unemployment benefits, the increase in unemployment benefits is part and parcel of that, $600 check that they're looking to make $2,000. I think that, those checks are a bridge loan to, the broader economy and, for the next few months until things look a little bit normal. I would say that, the employment picture, just the traditional, unemployment rate, coming in more and more will, no pun intended, will trump the idea of a $600 or a $2,000 check. I think that without a doubt that difference is enormous for those that need it and that will receive it. I think, though, that ultimately having a job that lasts, for the indefinite future, it has a lot more of an impact than whether it's a $600 or a $2,000 check, as important as that is. So I think that, we will get there. But yes, the next few months it's really strange to think that the future is so bright, but, the next few months are so murky. So but I think that, the market's forward looking. We know that, we see it every day. The futures are rallying this morning. So, we will see, as we all say.
Josh, we got a couple seconds left here. I just want to get some of your picks. What are you buying for the coming year?
Sure. Yeah, great question. So, consumer spending, we know the story. I think that there's a lot of room left. So, we're looking at BJ's in our mid cap 30 fund, 14 times earnings, a competitor to Costco, it firmly lives in Costco's shadow. And, BJ's is a great operator, great valuation. They generate an inordinate amount of consistent free cash flow. Would also look at Lithia Motors. It lives in kind of the shadow of what has been a big story in used cars, CarMax and Carvana. I would note for Lithia, a compelling valuation, about 14 times as well. I'd also say that, they are firmly entrenched in the used car market. The majority of their sales, or at least auto sales, that segment of revenue as opposed to service, the majority is in used car sales with, great margins on that side of the business. And then finally, Big Lots. Big Lots is interesting. they've risen to the occasion. It's about 6 times earnings, so it's, it's not just about PE. I think it's also about their pivot and kind of getting more into the online business, the ship to store business,
Sure.
and reconfiguring the mix.
Shepard Smith here. Thanks for watching CNBC on YouTube.